Market observations for Perth, WA. Now this is a capital city that's growing rapidly, and we very often get asked questions about why Perth. This is coming generally from eastern seaboard Australians who don't really understand the makeup of the market, the dynamic over there that causes it to be an area of interest. So let's take a deeper dive into the market today and understand Perth intimately from the perspective of an investor. Okay, what we're obviously looking at here is a bird's eye view of Perth. We can see the Swan River running through the middle. The city obviously extends along the coastline. It doesn't come in too far, about 20 kilometres, but it is a coastal city. We've got major arteries, train and road links into the CBD, but the locals don't really like to catch the train. They like to commute using their cars. They like to have the air conditioning going. Quite a warm climate over in WA. So around 2 million people. Let's move into a deep dive into that population growth and why they are moving there. So this is the story of Perth. It's often, considered Queensland as, ahead of the pack, well and truly ahead of the pack in terms of population growth. But we can see here, year on year, this is coming from the UN, believe it or not, the United Nations Population Study. This is year on year population growth, 4.9% population growth in one 12-month period. We can see this population growth accelerating and remaining very strong right through until today. This is the underlying story of Perth and what's actually occurring over there. We've got a mining boom 2.0. And why is it different? Well, this is a story and an underlying concept that we're seeing over in Perth, that it is now a diversified mining boom. Okay, it's service-related industries attached to mining. Things are a little bit different now. The speculation, the boom and bust cycle of the first mining boom has now consolidated. You've had a city that has now recovered and consolidated, a lot of spend in infrastructure, and now they are not as reliant on the mining boom. This is a slow, steady burn now. We've obviously got China with a lot of volatility with their economy and usage of our resources. Now we've got a Perth market that's organised. We've got a mining boom that looks to be far more sustainable. This is the story of Perth. Mass infrastructure, public utility spending. So the Perth CBD, universities, tourism, a lot of cultural and arts and society infrastructure spend has been put into this market since the correction, since the marketing boom and bust. In the last 5 or 6 years. A lot of money being spent on these items that turn Perth into a world-class city. It's now no longer our Western capital. It is a truly global city. And I think that's the reconnaissance that's occurring over in WA, is this is now seen as an entry point into Australia and a true candidate to sit up alongside Melbourne and Sydney as a viable option to settle into Australia. We do need to see the box as more than the Perth CBD. It does extend into and along the coast into the suburban centres. So this is also a story today around the local government areas that are driving the city forward. Let's start by framing the market opportunity. I want to do an investigation about the overall strategy, the methodology we use in assessing a market. I wanted to dig into the for sale signals that we would look at, the buy side signals, and then I wanted to take a deeper dive into the rental side, okay, the investment signals that we look at in the market. So let's take that dive now. I'm going to begin this study by looking, I know it's counterintuitive, but looking at the rental side of the equation, the rental signals, and then talk about the relationship between these rental signals and the buy side of the market, because one drives the other. And I'm going to explain the logic in a moment. So what we're seeing here, obviously, once again, is the Perth from the bird's eye view. We're going to look at where rents were last year. We can see this is $100 per week. All right, so the nice dark red areas are obviously up towards $1,000 a week. This gives you a lay of the land for rental prices, which does translate roughly into property prices to some degree. But this is showing where the clustering is occurring of higher rental areas. Let's take that off the map and show you where the higher rents are now. So obviously with the bands of rents have all shifted. We've got far stronger clustering of reds. And generally across the city, it is a nice darker shade of reds. Rents have been increasing very quickly in WA. And I'm going to talk in a moment about how rents drive price signals or buy signals. This chart is the difference. This is the net change. Okay, so look at the percentages here. Anything that's a shade of red or orange or cream is positive rental growth in the last 12 months. Very few blue areas here where we've had negative growth. Okay, look at the groundswell of rental growth through this middle pocket in the north, down here in the south, down here in the Rockingham areas, along the coastal areas, in the higher lower south areas of the Perth CBD area. This is extreme rental growth. We're talking 15 to 20% rental growth across the city in a 12-month period. What does this do and how does it impact the buy side? So people are suddenly paying 20% more to rent a property. They're going into an open home and seeing 20 people making an application. They turn around to each other and say, hey honey, why don't we go down to the bank and see if we can get a loan? So very quickly, this increased price pressure on the rental side shifts people across to the buy side. It happens overnight, okay? And this is what we're starting to see now in the Perth market. And I wanted to start this analysis with the rental side of the equation because one does drive the other. Okay, with that in mind, let's now investigate the overarching methodology that we assess when considering a market. Now, usually as a research company, our algorithms are doing this assessment automatically and they are ranking areas 1 through to 15,000 in terms of the suburb analysis. But this is the high level. This is the science behind analysing a market. And I'm going to break through this formula in a moment. We look at the core drivers of demand over here. Employment, new projects, infrastructure spend, creating more utility in an area for people to be attracted towards. Lifestyle and lifestyle-based improvements and population. These form the buy side, the demand side. On the supply side, we look at new supply entering the market. This forms the overarching opportunity. This is the analysis we're going to be completing today. All right, let's dive in quickly to employment. We just want to get a lay of the land here. This is not comparing this area against anywhere else. Remember, that's the key when doing a market assessment. It's comparison. How does this market stack up against others? We're not going to be doing this here. This is just to understand the lay of the land over in WA. Okay, healthcare, social assistance, large employment in education training. Okay, so this is the lay of the land around what's occurring over in WA at the moment. All right, what we're seeing here is job listings. Okay, we've got a nice stable job market. We had a spike of listings when a lot of businesses were really bullish back here in April. That's now stabilised where the jobs were taken. We've got a nice tight employment market. This is now hovering around the long-term average job listing. So a nice, healthy, buoyant employment market. Now I'm going to continue the study into the Perth market by taking a deeper dive into one of the key LGAs in the area. We're talking about Joondalup. It's in the northern part of Perth. We can dive into the maps a little bit later. Now Joondalup is a mid to slightly upper socio-economy. You know, it's a suburban area, close to beach, a lot of public amenities. I've heard it described as the northern beaches, you know, a Sydney comparison to the Perth market. It's only one of around 10 local government areas that we're concentrating our attention on at the moment in Perth. Okay, it's one of those 10, and there are only 3 or 4 suburbs in this area that are currently in their buying window. Okay, so I am using this area as a representative area of Perth for our investigation. It is only one of many areas that we are currently considering. Okay, what we're looking at here is once again a bird's eye view, but it's a little bit hard to pick up, but bear with me. We're looking at where the businesses are located in Joondalup. Okay, so the green clustering here, spreading vertically in the Joondalup area, we do have very strong clustering of employment and business. Once again, one clustering here of industrial centres. So one industrial area that we do need to be aware of when investigating the Joondalup area. And finally, we do have a health services cluster in Joondalup. This is just helping you to get the lay of the land. A lot of the employment, a lot of the industrial, a lot of the health focus is in the northern part of Joondalup. It is its own independent CBD. So think of the Parramatta CBD in Sydney as a separate CBD. Joondalup is considered as a focal point. So people living in Joondalup, a large percentage of them are living and working in the Joondalup area. Now, there are some big ticket items occurring. We've got health investment, we've got a marina project, so public utility, lifestyle improvements in the area. We've got main roads and a lot of infrastructure improvements through the Joondalup area. So we can see where they're located, and they are focused in and around this business hub, this health centre hub, and a lot of the employment hub in and around Joondalup. Now, this is private research, okay? This is ABS data. This is population forecasting data, so this is per annum increases. So down here means that population is stable. As we're going up here, we're coming up towards 0.5% per annum population increases. So we can see that we did have a spike and a stabilisation in the Joondalup population. Remember, there's not a huge amount of scope here for new supply. This is a built-out area. We've got a lot of larger blocks which may have infill characteristics, but this is an area that is stable. It's already established. Population moving into these areas generally doesn't occur en masse. Okay, this is a very scarcity-driven area. But we can see very strong signs of imminent population growth set to occur. This is private Ripehouse Advisory projections. Just letting you know, our Ripehouse Advisory population growth forecasts were featured extensively by Bernard Salt in the Australian last year. So we're a market leader in coming through COVID, reforecasting population growth at a local government area level. So this population growth figures, the forecasting out for the next few years is COVID proof. We have considered COVID in our considerations for population forecasting. What we've got to confirm here is this population coming into the Perth area actually requiring housing? And we can see that once again, this chart is looking very similar to the population growth chart. So once again, this population is requiring above and beyond levels of housing. So where is supply coming into the market? I think what jumps out to me on this chart here, once again, the bird eye view, is supply coming to the market. You can see this heat map, a lot of supply coming in here into the southwestern pockets of Joondalup. It's up here into the north around the business centres. It's very evenly distributed. We don't have major clusters of hundreds of dwellings going into the Joondalup area. It is an established area, so therefore it is only small infill opportunities only. We don't have supply risk coming into this market. It is contained. We have very strong scarcity level drivers. Okay, so we've looked at the macro level drivers, employment, population, lifestyle, where the supply is coming in, any new projects coming into the pipeline. Let's take a deeper dive into the buy signals. What are we actually seeing at a market level? So we need to remember our analysis for Joondalup does need to focus on houses. Okay, that is the most common and in-demand property type. It needs to be the focus of our attention. So let's have a look at this pinkish purple line here, the filled-in line. This is the rolling days on market. So it's a 30-day median rolling days on market number. It is a very strong signal around current buy, demand, supply dynamics in the market. We can see that it has tightened up dramatically. We're heading down towards 10 days, which effectively is about as low as days on market can ever go, because we still need to have a period of negotiation on a listing. We have some off-market listings. We might have one, open home, offers made there, and then the offers accepted on the Wednesday. Okay, 10 days is generally about the minimum a property can ever sell, and this is the median in the area. It's not the minimum, this is the median in the area. It's extremely tight market, and this creates price pressure. So when days on market are down at this point, this extremely tight market is creating upwards price pressure. We have seen some easing coming into August, but we expect this to dramatically tighten up heading into the spring season. Now I'm going to investigate the asking price. So this is not median prices, this is not suburb values, this is the current asking prices for the area, and it has stabilised, but we can see the band has expanded. So the range of properties was very narrow down here. It did expand when we had people chasing any type of property, paying for exclusive dwellings and then unrenovated properties, and it is starting to tighten and contract. And we do generally see this in a market that's about to tighten. The coil has been bound and it's now about to spring loose. We do start to see this interquartile range narrowing as people start to overpay for unrenovated properties. So expect that trend line to continue in this fashion in this Joondalup market. Let's look into market discounting. So this is once again another signal of a contraction in a market. We can see here once again, let's focus on the houses. We can see the moving line through the middle. We can see discounting here beginning in September 2020 at probably been listed for 400 and selling pretty close to 400,000. We can now see a property selling for 6-7% above the original asking price. So this is a market where the sales agents are throwing their hands in the air. They're trying to have a stab at the property in the market. $400,000, they don't really have much of an idea. Okay, the property is listed for sale. It's selling for 7% above asking price as a median. This is not the minimum. This is a 90-day rolling figure, so it's once again a slightly longer time frame. But this is an extremely bullish signal of a tightening in the market, especially when we see that the asking prices and the actual values in the underlying market haven't really changed. This is showing this coil that's been wound up and about to pop, right? So it's really starting to get moving away, and the asking prices will start trending line upwards. What we need to investigate, this is a check and balance. We've got to determine, are these buy side signals confirmed on volume? If it's on a low sample, it might not mean as much. This is showing that there is a lot of depth to the market. We're talking about 800 on-market listings in the Joondalup LGA as of today. We can see that this has stabilised. It's quite stable. We did see a tightening in the market and an opening up, and it is stabilising here at around that 800 mark. It is confirmed on traditionally long-term average market depth. So these signals are worth listening to. Now this is a really interesting chart. It's the days of remaining supply. So this is a function of sales volume and days on market. We're looking here once again on the houses chart. We are looking, this is a very tight market. There's a lot of competition that's emerging in this market. With the coiling that's occurring around the days on market, we expect this to start popping and moving, but we see high competition, and this is a very stable level of competition in this market. So this is a lot of demand side pressure that's operating in Joondalup. Okay, with that said, let's analyse some of the rental signals that we would investigate in a market. Okay, what we're seeing here are vacancy rates in the Joondalup area. We can see here it's just under the long-term average over the 12-month period is just under 1.75. For some context, the national average for vacancy rates is 3%. Anything under 2% is an extremely tight rental market. We can see this is still hovering around that 1.5 to 1.75%. This is a very tight, coiled up rental market. And what we see that's occurring, or the impacts of that on a broader market, are vacancy rates. A lot of people move into the area wanting to rent first. They don't want to buy, they want to rent a dwelling and test the waters. Causes vacancy rates to tighten like this. For some context, over the last 5 years, we've seen a tightening of vacancy rates from 4 or 5% down to the current day 1.5%. This has been a long-term tightening in the rental market, a very healthy sign. Very quickly, as we've seen before, it results in people paying more to rent properties. They have to secure a dwelling, they pay more and more, so we start seeing rents increasing, and we've seen that with the map overlay that we looked at before. And then once again, with that human dynamic of it's now cheaper to buy, let's go down to the bank and get a home loan, that shifting is occurring over onto the buy side. We're seeing days on market very low. We're seeing sales volume, the days of supply extremely tight. It is already occurring where we're seeing that shift over to the buy side. Let's move along and investigate the rent side. So we can see now, this has been the long-term trend. As vacancy rates have been 1.5% for almost 12 months, we see this has caused upwards price pressure on rents. Once again, another confirming signal on the rent side. Days on lease is an interesting chart. So we can see that this market has been tightening, coiling up heading into the spring season, and now a dramatic tightening in the rental market. This is only just getting started over here, guys. This market has still got a long way to go because we are still seeing extreme shortages of housing. Okay, we've taken you through a deep dive, a very deep dive into the Perth market. Hopefully you can understand the concepts that we need to apply when assessing a market as an investor should. We're looking at the overall methodology of how to assess the demand and supply dynamic. We're looking at the buy signals and then the rental signals. There is a relationship between the two. Overall, Perth, it's now a global city. It's an entry point into Australia for many nations. It's an access point into Asia. A lot of European settlers are coming into Perth and staying there. We've had dramatic spending on public infrastructure projects, so any mining boom 2.0 will be stabilised and ingested now into a large global city. We've got vacancy rates and a rental market that has come down from very unhealthy now to extremely tight. This is a coiled up spring about to pop through. Hopefully that's been informative. Thank you.